Good afternoon, Chris. It's July. How are you?
Yeah, very well, thanks. Very well. Second half of the year, where's that come from? Nearly summer holiday time, I guess, for many people. But for us poor investors, it's only halfway through the year. So I guess, as always, it's a good time to review what has happened, but even more importantly, think about what may happen over the rest of the year.
Yeah, absolutely. Well, let's hit that point straight away then. So we've seen the first 6 months of the year. What was your take on it?
I actually think it was workable. And I say workable in the sense that financial markets haven't been wondrous, fantastic, and unbelievable. But you shouldn't expect that, given we've seen some inflation globally. We can all see that in the cost of living crisis and problems, not just in the UK, but pretty much in any other country you could talk about in the world. Interest rates have gone up for various reasons, not just inflation, but from some other choices. There's been still geopolitical uncertainty people naturally are worried about. You put all of that together, unsurprisingly, financial markets have been uncertain. But importantly, have they been horrible, impossible? Absolutely not. Financial markets have been okay. And I think given the backdrop that we've just been talking about and thinking about and seeing over every website or newspaper or anywhere on the TV or whatever, that's not a too bad backdrop. I think what's interesting is thinking about where we're going to go prospectively after this, because the key for any investor is always to look forward. We've talked about that before. That's the key for any investor. Unfortunately, despite the fact that the world remains a little bit uncertain, despite the fact that there are still issues and challenges out there, we can still see reasons to be optimistic about the future. The world is still, it's not just spinning, but actually still slowly getting better. And despite the fact that, unfortunately, we're still worried about inflation and interest rates and other challenges, fortunately, I think some of those problems may start to move away as the rest of this year progresses. And on that basis, financial markets, because they always look forward, I think could have the scope to actually have a positive second half of the year. And overall, I think we'll conclude that 2023 probably isn't going to be that bad a year. And on the basis that we have all of these challenges, that's not a bad reaction, I think.
We'll touch on what you expect will happen over the course of this year. If I just go backwards one step, Chris, what was your biggest surprise then in the first half of the year?
Undoubtedly, the biggest surprise was the fact that we are still seeing higher interest rates from central banks. Bank of England, what are we up to now? 13 times, I believe, something ludicrous like that. Now, it's not the fact that I'm old enough to remember interest rates at much higher levels than they are today. I guess what has surprised me is that the Bank of England still feels behind on their interest rate cycle. They're still talking about raising interest rates further later this year. Now, I personally would have thought that they would have said, by about now, let's stop, let's just watch how things progress. We should expect to see inflation start to come a little bit more under control. And certainly my personal view, going to the supermarket or seeing the costs of most things that we buy on a day-to-day or out there available to us, those prices are starting to become less of a problem in the sense that they're stopping going up so much, they're starting to come a little bit more under control. Now, that's what you would expect, given the fact that people are being a bit more prudent. They're not choosing to spend money in their day-to-day lives quite as easily. And so when you think about all of that together, you would have thought that inflation starts to naturally come under control. Therefore, I'm a little bit perturbed, I would say is probably the right word, thinking about the Bank of England's policy. And it's not just the Bank of England, to be fair. You're still seeing central banks in Europe, even in America, talk about the scope for higher interest rates. I was a bit surprised by that. Saying that, my feeling is, and I say this from somebody who's been watching central bankers, rightly or wrongly, for about 30 years now, my feel is that often they make two general mistakes. And one of them is keeping interest rates, or at least increasing interest rates, for too long. And we only really know this, unfortunately, 6 or 12 months after that interest rate peak cycle has been hit. So I guess what I'm trying to say is, let's call it January next year, maybe people are starting to say, why are central banks even thinking about raising interest rates? It's clear that they really should have stopped months ago, when perhaps it's still only a debate at this moment in time. We shall see on that front. That's been my big surprise of this year, no doubt on that front. I guess my positive so far for this year, though, is the fact that the average equity market, the average share market has actually done okay. And given all of the problems that we've talked about and seen, that's not a bad result. And the most important thing for any investor is always to remain involved in the stock market. That still remains the big critical thing for anybody. Whether it's for your pension fund or for your broader investment target option, the key is to remain invested in the broader financial markets. Because if you do remain invested in the broader financial markets, you've got that scope to potentially benefit from that broader improvement of the global economy, which tends to naturally occur over time. Otherwise, I guess we could all keep our money under the bed or something, but it's probably not a wise thing to do at many levels.
Right, thanks, Chris, and thanks for the surprise and the positive as well. That's nice to have the fair reflection. Let's look on to your point then, that you think the rest of this year will progress and it will end up reasonably positive. Is there any major takeaways from that then that is sort of driving that thinking?
I think two things really. One is, I've got to say the word geopolitics again, and I'm sorry this has become a word which we've all seemed to have been saying too many times over the last 12 or 15 months. But two important impacts, I think, over recent weeks. One is Mr. Putin, who unfortunately we've mentioned far too often, is obviously receiving now more challenges, correctly, I think, within Russia. Now, he may have pushed away the most recent initial challenge, but clearly the insight, if you like, for his political management surely has to be, he has to move away from his terrible interactions in Ukraine and has to start becoming much more sensible about what to do, i.e. stop the war, do a deal with not just Ukraine but the broader world, and allow some of those uncertainties about world war issues to start moving away a little bit. I think that's one thing to watch out for over upcoming months. It's also very interesting to see how America and China, both at a business level, but also even more importantly at a political level, are starting to discuss trade and deals and interactions a lot more. I think that's quite a positive impact too, from my perspective. So geopolitics getting a little bit, hopefully a little bit better as this year progresses, I think makes people start to think about the prospects for a 2024, which is not as problematic as perhaps they were thinking. Now, we have some obvious issues still for 2024, one of them being the US presidential election, which I know that's over a year away, but we've got to, as investors, start to think about it a little bit. But I'm hoping that some of those geopolitical issues will become less of a challenge. And if that's true, we all know that an improving global economy, a global economy where people are trying to be ordinary consumers and build economies, create jobs and all of that sort of thing, is just what a global financial market needs. So that's what I'm hoping to see much more thoughts about as this year progresses. We're still going to have challenges. There is still a bit too much debt in many parts of the world. There's still going to be a bit of inflation around the place, unfortunately. There are still going to be things to worry about and be concerned about. But the key about being an investor, of course, is to be diversified, is to be thoughtful, and to be ultimately forward-looking. And if you worry too much about the problems that you're seeing today, then unfortunately you won't participate in the opportunities of tomorrow. And that's always still the way to think about things. So I'm keeping my fingers crossed, but as always, I'm an optimist at the end of the day. And you know what I'm going to say, the glass is always half full, and it still feels that way to me today.
Great stuff. Last question, just to finish up on then, Chris. When do you think, and I've got to ask you this question, when do you think the central banks will get to that point then of saying, actually, enough's enough?
I think it depends a little bit on which central bank you are. The Bank of Japan hasn't raised interest rates for an awful long time, so long I can't remember the last time they did it. The central bank in China is actually probably likely to reduce interest rates later this year. I think the key ones to look at are actually not the Bank of England, it's probably the Federal Reserve in America. My guess is by the end of this year, they will say, we're not going to raise interest rates anymore, full stop. In my opinion, they shouldn't raise them even now, but they possibly may think about it in upcoming months. European Central Bank were a bit late to the game, and I think they will probably do at least one or two more increases, but by the end of the year, they will have a very similar view to the Americans. The big one to think about, and of course the most relevant one for us, is the Bank of England. The Bank of England appears to be suffering a few issues and challenges over their policy making. And I know people are very concerned about inflation, very concerned about a lot of the backdrop issues in the broader UK economy. But my personal view would be is that Bank of England has to do exactly the same thing that the Federal Reserve are doing. They should start saying, we should actually consider stop raising interest rates. That should be something they should overtly say over upcoming months. Now, whether they're going to say that or not, that is their decision. I don't sit on their panel or committee that make the decisions. But if I was sitting on it with the other Mr. Bailey, then I would probably hold interest rates today. That would be my personal view. Because my observation going to the supermarket, or as I say, running about the general economy, is that sort of lower inflationary pressures are already apparent. And I think actually I fear that any further interest rate increases by the Bank of England may be perceived at the end of the year of actually going a bit too far. That would be my perception. So it's a big discussion over upcoming months. Personally, I would stop interest rate increases today if it was my decision. But I think what you'll see from the Bank of England is, let's call it, that key September meeting, September-October time period, I think will probably be the point where they will have a more overt decision as to whether they can stop formally now, or whether the debate about whether to raise interest rates or not continues. That would be my interpretation of their sort of images of the backdrop at the moment.
Brilliant. Thank you, Chris. Thanks for the recap. Thanks for your look ahead, as it were, to 2023. And we'll no doubt catch up next month in August and the start of the proper summer holidays for many.
Indeed, that's right. Yeah, some of us, I'm afraid, always have to work in July, August, and forever. But hey, that's the way it goes. For the average person, hopefully, elements of both July and August can be a little bit quieter. But we shall see.
Brilliant. Thanks, Chris.
No problem. Bye-bye.